So the weekly return so far is at 3.12%. So that's great. I mean, we're on Wednesday today, halfway through the week, obviously in our midweek recon session. Good afternoon, ladies and gentlemen, and welcome one and all to your Markets Now session today with your host here, Max Norbury. We are on the 16th of July, getting ready to kick it off in the community events stage this Wednesday. So, lots of stuff been going on in the markets this week in terms of the geopolitical scene. We haven't actually had any major strikes from the White House administration at the moment regarding the tariffs. That's relatively stable, but we still do have the underlying trade war theme with the Middle Eastern tensions and everything else that we've been covering over the course of the last few months going on at the same time as the economic data. Now, in terms of the econ, it's been a big week for inflation, and in terms of what the US has been coming out with at the moment, inflation isn't going anywhere. It's pretty sticky. If we look at the Fed Watch tool, I'm not sure if you guys have had a chance to actually look at the Fed Watch tool at the moment, but there is a significant percentage priced in for a rate cut from the US coming in September time. So it's going to be a big one. This will be the first rate cut that we've had for the US in a long time. Of course, we are only mid-July. September, though, is around the corner. And I think it's going to be, regardless of the fact that it's going to be priced in, I think it's going to be a pretty big one. I think the stocks are definitely going to be enjoying that. And we're probably going to get ready for the next leg of the move up because these stocks have been rallying out of control recently. They have been taking a bit of a rest over the course of the last couple of days, but things are getting wild, and I think that's going to continue. And with the expectation of a rate cut around the corner as well, I think it's just going to add fuel to the fire, in a manner of speaking. So in terms of today's econ team, we have the PPI month-over-month data, which has just been released. You can see that up here on the screen. That's at 0% at the moment. That's down from a 0.1% 0.1% prior figure and a 0.2% expectation. So that's a miss on the data by 0.2% as far as the analysts' expectations were concerned. I'm actually going to go a bit easy on the analysts' expectations for this one this time around, and that is predominantly due to the fact that the inflation numbers were actually increased and heightened. Naturally, you would think with that trend, the PPI would be as well, but we actually had that deduction in the PPI this time around. Now, the market's reaction to this has not been immense, but it has been a bit of a knee-jerk reaction, as we can see here in the DXY. This 50-minute candlestick here is the PPI candle. It is trading lower at the moment. It's holding firm. I've been watching it anyway. It has been holding firm down here at around 98.56. It'd be interesting to see if it breaks the floor at 98.45 and then get that continuation beneath back down to, I would say, liquidity ceiling. Next point of calls around 98.15, maybe 98.10, and it'll go from there. But that's that one. So that's basically where we are today with the PPI. We don't have any other major econ out today. There's nothing else on the horizon. We had the UK inflation rate this morning coming out. That was at 3.6%. That marks a 0.2% increase off of the prior figure. So we were at 3.4. The analysts' expectations were at 3.4 this time around, looking at stability and inflation rate there, and it actually came in at 3.6%. So that's a pretty big one as well, and I think it's definitely going to be probably not going to be good news for the BOE and their stance on monetary policy at the moment, with the understanding that they did ultimately want to continue cutting rates. I think they're probably going to hold off on the basis of that, and we may get a delay in the next cut, and have to look ahead for that one to come into play. We do have the unemployment rate for the United Kingdom tomorrow. That's 7 a.m. there. You can see it on the screen. 7 a.m. first thing in the morning. That's 4.6%. At the moment, the prior figure was 4.6% as well. So they're not really changing their tone on that unemployment rate this time around. I think it's fair to say stability at 4.6% is quite likely. Maybe a 0.1% reduction, maybe 4.5 would be my point of call based on the trends in the data. But it's definitely not going to be a major market moving event, that's for sure. And then tomorrow afternoon we have the retail sales, and that leads us into Friday. Friday we've got inflation rate for Japan. That's obviously at 12:30 midnight here in the United Kingdom. We have building permits and housing starts as well for the US at 1:30 in the afternoon. But ultimately, team, it's not going to be driving volume. It's not going to be driving the money in the markets. So we are going to be very much reliant upon the organic trading volume as we like. Good afternoon to you, Braden. Good to see you, buddy. So that's where we are with the econ at the moment, team. So what we'll do this afternoon then, we will get down on everything that we did yesterday. We have a few positions. We had a few positions trigger overnight. We had cable, which hit target yesterday, which was great. We had the NZD CAD short, which did not hit target. That actually hit stop loss. So that was a negative 0.25% trade. I think we net resulted a 0.51 or a 0.52 off of the back of a 1 to 2.36, I want to say, in cable. So that covered the losses and then gave us an extra 0.28, 0.3 in the tank from yesterday. We also had a pretty good US trading session yesterday as well. So I did clear down everything from yesterday's trading session already. Did my housekeeping before coming on the stream today. But we did the NAS 100 and the S&P yesterday. Left out the US 30 Dow Jones. We actually got some pretty decent moves. So yesterday's NAS 100 was over here somewhere. Yeah, so it was amongst here. So we had this move down, which was the 230 breakout move, and we were looking at the breaker structure from the high, essentially coming down to the low. That was a really nice move. The whole thing was done in dust in the space of 10 minutes. And on the S&P, we had a very similar format. Yesterday's market breakout, which was up here, and that was the S&Ps. So we had the rejection. Obviously, we had the high there, really nice rejection point. Had the low down here, the point of liquidity. Dragged that back in time. That's the one. And we had the sell-off down to this area in here, which was quite nice. I didn't take the full thing, but it was a decent move and got a 1 to 2 point something at the back of that one as well. So it's definitely some wind in our sails this week. I mean, it's certainly been going good. Yeah, it's certainly been going good. Let me just flash over to a TR and see what's occurring. Actually, I don't actually know if the NZD CAD's only recently hit its stop loss, so I'm not entirely sure that'll be updated yet. That's fine. We can take off a 0.25% or whatever that is. So what are we looking at? Let's get down here. So the weekly return so far is at 3.12%. So that's great. I mean, we're on Wednesday today, halfway through the week, obviously in our midweek recon session. But the weekly returns at 3.12%. Take away the minus 1. Sorry, get my words out here. Minus the 0.25% from yesterday's, and we're at around 2.8% there. So that's great, and we still got a good few sessions to go before the week's closed out, which is great. So that's going well. That's going all right. So I suppose what we're going to do now then, as I said, mentioned a minute ago, we're going to dig into multi-asset classes. We're going to be looking at UTCF repositioning today, finding some trading opportunities across all of the asset classes. We don't have a great deal of market exposure out there at the moment, which is good for us because it does mean we can renew the pipeline and start to look at some fresh exposure. So that's fine. There are a couple of bits and pieces in the markets that we do have ongoing at the moment, not that are live and running, but that are at market and waiting to trigger. So we will ultimately be looking at those as well and seeing whether or not we need to either clear the desk or we can continue on and keep them in and go from there. But I think for the most part, most of them are going to stay. I think most of them are going to stick around, but that's fine. I want to get some Australian dollar exposure. I definitely want to be trading something like the Aussie CAD, possibly the Aussie NZD. I'm going to say that right now. I want to look for something in those two. We've got the pound as well. I need to get something in the pound. I'm probably going to leave the euro alone. Maybe the euro USD is a potential after the CPI rally that we had off the back of it yesterday. And then I want to also maybe get in some USD yen. So just as a rough sort of benchmark there at what we're going to be looking at. And then of course we will be sort of coming to the end of the session today, looking at the US indices, where we'll be preparing for our US market open. So let's get going then. Good afternoon, Corritum, as well. I've just seen you in there, buddy. Yeah, good afternoon. So let's start down at the bottom of the list then, as we do. We'll work our way up and through. So the USD yen at this time, big jump up yesterday from the CPI. The PPI event this afternoon has created a short sell, but honestly, I'm not overly keen on selling into this because of the fact of where the daily is. So we've got the daily up here. This is certainly a big breakout that we've had on the daily time frame. This point of inflection here cannot be ignored. Okay, if I can just get my zone, please. Yeah, so that point in there, this area in here it's just not something I can ignore. It's not something that I want to ignore, nor is it smart to. So that's where we've got the break up above, we've got the close above, we've got the retest, which is now taking place. This ultimately could lead to the second leg of the move, or maybe even the third. Actually, looking at this one, it's a really big move that we've had up here at the moment. We've had the break, close, retest, the midpoint, and the W reversal here. Big break structure, straight into liquidity, big jump above liquidity, the close above, and now the retest with the assistance, of course, of that econ, that PPI event, which is bringing down the asset value a bit. So at the moment, there's nothing we can do with the USD yen. I mean, we can look at potentially setting up the long, which is going to be ultimately the rejection trade from the liquidity here. Maybe looking for the buyback to this point up there, based on a breaker structure event taking place at maybe 148.83. I'm not seeing it though. It's not there for me because the problem is we have ceiling here. We have a floor in there as well. So we've got these two kind of sort of semi-significant trading margins at the moment, situated in the middle of our trading margin. So we don't have a clear path of least resistance. We can't take the long. We can't comfortably take the short. This means we need to sit out of the market. So as much as I wanted to be involved in that USD yen, as I was saying earlier, ultimately it's not going to make sense right now. So we're going to have to skip that one out. So let's go back up to, let's check out the USD Swiss as an alternative. Okay, so the USD Swiss at the moment is trading beneath daily liquidity, which is great. Yesterday we had two trade ideas actually situated in this USD Swiss instrument, and that was the proposed plan to trade between the range down here. And I didn't want to go for the positive imbalance trade. Primarily due to the news events yesterday, but actually the damn thing played out amazingly well, didn't it? We got the big breaker structure, market absolutely flew, broke through 79.85, rallied right the way up to 80.26. It's stuck there at the moment. The PPI event has assisted in the knee-jerk reaction, the sell-off. I cannot claim that is commercial liquidity which has given it this knee-jerk reaction. So because of that, we have to take it, we have to take it with a pinch of salt. Now, I do like this level in here. Okay, that there is the beginning of the inflection point. This is the lowest low. So if I bring this one from there and I put that one down there, we now have a relatively decent trading margin. Now the question is, how do we ascertain what style of entry we would go for if we did want to short it away from big liquidity? Which is our mission right now. Our mission is looking at where those commercial areas are and moving away from them with the commercial sellers or buyers and vice versa. So what I'm really liking about this one is the fact that we've got these highs here, right? And we've got quite a few of them. So what I'm thinking to myself is, if we had a breaker structure point from those highs and I drag that one across, that's going to yield some fantastic risk reward yield. So if I have an opportunity, let's say there, and we have the target about here, that means the stop loss could actually be above both of those zones at a 1 to 2.1, covering the spread net return 0.5%. That's a really well balanced trade idea. We are now, what's the time? We're currently quarter to, let's say 13 minutes to 2, right? So we've now surpassed the point of risk from the econ event, which is that sort of you want to wait 15 minutes before, 15 minutes after. That's the 30-minute rule. And we're now sort of out of the sort of dark with that, right? So anything from this point on, it's probably going to be considered a good move, an organic move, not fueled by an economic event. So the chances of this one coming down now falls to obviously the commercial money, which is all up and around this area of the market, where there's going to be a lot of limit pending order shorts. So for me, that is a really, really nice setup, and that is a setup I want to put in. So we're going to have a pending order on that one. So that one is going to be the USD Swiss. It's going to be a pending order. It's going to be a break of structure entry strategy at 0.25% risk, and clearly it's a short. So yeah, that's really nice. I like that. I'll download that one. Right, so let's move up. So NZD-JPY, we had opportunities in this one. The NZD-JPY currently, sorry, it wasn't the NZD-CAD I was on about earlier at the beginning of the session, by the way, guys. It was actually the NZD-JPY that was a stop out. So this one here, we took the breaker structure short. We came back up. It did stop out, unfortunately, and now naturally going down to its target profit, which is a bit of a bloody shame, but there we go. Now, I still quite like this NZD-JPY, but we're going to have to wait for the buyback. So I am still long, green and strong. It was the wrong time to go short when we did, obviously. Yesterday evening, 4:30 time is when we took the shorts, when it triggered. It came back up in the evening, 1 o'clock in the morning there, and we did have the rally back up to liquidity, okay? But I still like an opportunity in this one, and we've got some pretty decent area for breaker structure. So what I'm going to do here is I'm actually going to come down and hit that plus and set an alarm. And what that alarm is going to tell me, basically, actually I'm going to have that alarm there. The alarm's going to be set for 88.15. When that alarm triggers, it means that the asset has hit the liquidity, and so therefore we can then discuss maybe tomorrow putting in a pending order and getting that NZD-JPY buyback. Right, let's move on. So next up is the NZD-CAD. Now, the NZD-CAD's alarm did trigger. I was well aware of it triggering yesterday. I was still at the screens when it did. But I decided not to do it, and I did express my thoughts and feelings towards it in the Traders Lounge at this point in time. With everything we had going on, it just didn't make sense, didn't seem right. And I'm happy that was the outcome of it, because ultimately it would have been a stop out. So that was the right call to make. And at the moment, I don't want to continue with this one. I still love the available trading margin. It's such a sweet setup here. But looking at this price action recently and what's been going on down here, see all this consolidation and this noise, it's not filling me with confidence. It's not the kind of move that I want to see. I wanted to see something very nice and clean with a good amount of trading volume. Now, if I scroll back in time here, we look at this low, it doesn't correlate to anything that's happened on the left-hand side of the chart. The actual area that correlates probably will correlate quite nicely, I would say, is this one in here. So if I drag that one across, we then actually can see that between margin 1 and margin 2, this is the 50% point, which makes that the median of our trading margin. And what I would like to think is that if the NZD CAD does come down here, we break through this area, it will probably fall straight the way down to 81.20. So that is a trade idea that I'm happy to take with a solid risk reward yield and a strong risk profile. So what I'm going to do down here is I'm going to have my stop loss at around 81.46. That's going to yield a 1 to 2.48, which is fantastic. And that's going to be a pending order. So what we're going to do here is we're going to put that in the list. So yeah, so we're going to have the NZD CAD. That's going to be a pending order. We're going to have a breaker structure access point to it, and that's going to be at 0.25% risk. And that's what we're going to do there. So I will download that one as well. Right, let's move on. Cable. So we had a really good time with cable yesterday, as you guys know. Cable at the moment, I mean, yeah, big trend continuation at the moment for this one. But the problem is, guys, we are situated now at a very significant level of daily liquidity, and the market is having a bounce back from it. So as we can see here with cable, we had this point of inflection here. Arguably could have had that little bit higher up, but this is the main point for me. There's lots and lots of movement going on in here. We get the big breakout above, we come back down, we retest, knee-jerk reaction, big breaker structure. Lots of commercial buying opportunities coming into the market here, and then we come right the way back down again, and that's where we're currently sitting. So for me, looking at cables, you know, even back here as well, probably have that just a touch higher. For me, this is looking like it wants to continue trading up. Now, if we think about the econ at the moment, I mean, this week in particular, we don't really have too much going on, but the CPI is very bullish for the US dollar. So there is demand for dollar at the moment. Now, since the PPI event came out this afternoon, like 20 minutes ago, the dollar index is actually almost fully corrected. So there is a lot of buying interest here. We still have the dollar demand, and that's important to remember. The dollar is in demand at the moment, even from the geopolitical point of view and the economic point of view. Dollar is in demand. So thinking about that, we want to really consider the currency that we're buying it against, because in order for obviously the dollar to be bid, we really need that pound to be falling down a ways as well. And this brings me back to the pound data at the moment, especially with the unemployment rate coming out tomorrow. It's probably the biggest event that we have this week for the pound. I'm not saying it is a mega event, but it is a pretty significant event. If the unemployment rate is at around that 4.5 to 4.7% margin, 4.6 obviously right in the middle, that's not going to be hugely great news for the UK. And with the state of the UK at the moment and everything going on, I think the dollar is the better buy. If I'm thinking about this from an investment perspective, I would rather invest in the greenback than I would the GBP in this current climate. So, I mean, we're only, of course, talking about intraday trading it anyway, but it just makes sense. It really does. So what I'm going to be setting up here is a long in cable. We shorted it yesterday. Today we're going to go long. Well, potentially. So we've got the point of inflection here. We've got this area, which is the new point of liquidity. We can see this having the reaction that we desire, because the market's coming up and it's losing steam. So we've got the point of inflection, and then we've got the 1, the 2, and the 3, the rejection of it. If we get the breakout back above here, then I'm thinking we are going to look at a potential for a buyback pretty significant up. And I don't want to have just the sort of very stereotypical in and out style of trade that we do so often. I actually wanted to be in this for a little bit longer. And I'm just thinking to myself now, this area in here is pretty good. So it could be a bit higher, but I don't want to go for the highest point. I just want to, as long as I've got that high in there, I'm happy. So what we're going to do here is we're going to have a long via the breaker structure in there, targeting up at the high. Okay, so we come down, nice margin available, entry, exit at 135.070, and then I'm going to have the stop loss, which is going to be situated at about there for a 1 to 2.4. And the reason there is because we have this point of liquidity in the market there. Now, it's not the main point, it's not the primary point, it's a secondary, but it's good enough for me. And I think that's actually quite deep into the big daily point of liquidity here as well. If the market starts getting a bid and the cable starts coming back on itself, I think that's going to be just fine. So yeah, so that's the long. So we're looking at a cable long. It's going to be pending order, breaker structure access, 0.25% risk, and it's going to be a long trade. So that's going to be that one, and we are going to download that there. Okay, great. So next up, I'm going to check the Euro USD. So the Euro USD absolutely fell off the cliff yesterday, and this is a direct result for the PPI. Now, CPI. Now, just to recap the CPI numbers yesterday, they did show that inflation is still an issue in the United States. We had a 0.1% uptick in maybe 2 out of the 4. We had stability in one of them as well, so inflation wasn't dropping down anywhere that could be seen, and this just adds a certain degree of additional risk, because at the end of the day, investor sentiment is positioned against high inflation rates, interest rates, sorry. But with the data that we're seeing at the moment, it works against the Fed in their monetary policy targets. So the Fed have their monetary policy targets in place for a reason. Of course, Fed Chair Powell's always being very, how do I say? Well, he's just a typical central banker, right? So what he does is he doesn't allude to much, and he likes adapting in real time to whatever the whatever the inflation rates are saying. The dot plot was revised this year, as we already know. We were supposed to get 4 rate cuts. We only now got 2. Everybody's looking towards September for the next rate cut to happen. If the inflation doesn't go anywhere with the rates at their current levels, he's not going to be cutting the rates again, which means higher interest rates for longer. This will eventually, the stock markets have been rallying against everything at the moment, against all the odds, but it will be detrimental to the stocks. And the indices, we will see them come down if the interest rate doesn't come down. So there's a lot of dynamics at play here at the moment that we need to consider as traders, especially when we're looking at multiple asset classes. Yesterday's CPI event crushed the Euro USD because naturally it's very bullish, the US dollar. And so that's where we are at the moment. But looking at where the Euro USD is at the moment, we have got the break, close and retest beneath liquidity here. It is a daily point of liquidity. And I think if we can break the structure down here, I think this one continues going. That, like I said to you, the dollar is bid. I am bullish dollar. And I think the euro at the moment it's having its own sort of state. So if we can get a breaker structure point maybe going below here, we might be able to see the continuation back down to approximately this level in there. And that makes for quite a nice little trade idea. And we're not going to be in it for ages. It's going to be done and dusted in the space of maybe an hour or two. But I think it makes sense. I really do. Especially now that we've got the break, close and retest naturally below the daily point of liquidity. So what we're going to do here is we're going to line up short in the euro dollar. Entry is going to be at 115.75, targeting down there at around 115.43, and the stop loss for this one is just going to be at a really nice 1 to 2.1. That's all I'm looking for there with the euro dollar. So let me just update this for a moment. So we've got euro USD, we've got pending order, we've got break of structure access point, at 2.5%, not 2.5%, my God, 0.25% risk, and it's a short. And that's that. Yeah, cool. So, short the Euro USD. Now, the Euro Yen, we still have access to. Yeah, we still got access to this one at the moment. I don't want to change this. I still like the Euro Yen, frankly. I think it's all right. We've got the short breaker structure trade down here, and we've got the break close and retest. Obviously, that break close retest took place at 1 a.m. this morning, so I wasn't around for that one. But I still like the long regardless. I'm still looking for that break close retest and the continuation of the trend. But I also like this short. Now, in hindsight, it might have been a nice idea to short it between these two trading margins. But again, I don't like shorting in daily liquidity there. So I will wait for this one to come back down. So that one's still going to be a good one to go. So I'm going to leave that one alone for the time being. And then we've got Aussie NZD and Aussie CAD. So Aussie NZD at the moment still trading, is still rocking a hard place, this one, which is a little bit of a shame. Let me just remove these pathways. This is from the market report. So Aussie NZD, yeah, a little bit of a shame at the moment where it's trading. We've got this nice area of inflection there. We can see the market comes forwards. We've got the break close retest, which is great. We like that. I think at this stage, I mean, I'll check the daily again, but I think if we can get a breaker structure above there, then a continuation of the daily liquidity at 110 is going to be very likely. I think ultimately that's my bias. That's where we're aiming for, right? So I think, you know, I mean, look at that's on 1 to 2.47. The stop loss is halfway down here. So I think that works. I think that works really well. It actually doesn't mean that we can't take a trade on the other side of it. There is the option to do that on top. I'm not sure if we should create a slightly wider no man's land or if that should be the target profit. If I have that level there, and what are our trading margins like between these 2 points in time? I mean, yeah, I mean the breaker structure is going to be, that's problematic, isn't it, right there? Great thing about Aussie NZD, of course, it is a prime, so therefore the spreads are non-existent, which is great. So I'm thinking we jump in. I'm thinking this is going to be the no man's land. Okay, so we're looking at the space between here. This is the no man's land. I'm going to look at a short pending. Very, 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 very short-term trade between these 2 points. And I'm going to have a 1 to 2.1 out of it. So yeah, dual opportunity on the Aussie NZD team. Got no man's land in the middle here. No man's land situated between 109.78 and the top of the breaker structure down here at 109.70. We're going to go long above, short below. Really nice, well-rounded positions. Obviously, the short is incredibly short term. The long a little bit more longer term, more intraday style rather than the day trading style. But I think both of those opportunities look quite good. Now, I wouldn't historically like to go long up at the sort of the upper half of a margin like this, but this is not a range. Okay, these are just two. This is from you know, a long time ago, big daily level of liquidity. And this one below it is more recent, but because we're not in a range, I'm happy to take the long and completion of the continuation of the trend. We did the same exact thing with cable trade yesterday. That pound against the dollar trade, the short, exactly the same thing. And that worked out quite well. So we're going to update that one as well. So this is going to be Aussie NZD, which is going to be a pending order, breaker structure, 0.25% risk, and that's going to be a long. And then we also have another Aussie NZD, pending order, breaker structure, 0.25% risk, and that's going to be the short. And then we'll see which one goes, which one works. Right, Aussie NZD, there we go. Thank you very much. Let's move on to Aussie CAD. Now, for those of you who've been following me for a while, I absolutely love the Aussie CAD, but recently I've not had the line on it. I haven't managed to find a decent line trading it. It might be like that again today. It might possibly turn out like that again today. So we've got we've got the major point of inflection in here, okay? We drag that one across, have a very similar situation to, what was it that we were just looking at? Has a similar situation? Euro yen, maybe? Maybe the Euro USD, in fact. It might have been the Euro USD. It looks exactly the same. So we have the nice big point of inflection here. The market comes across. We now are using this as the ceiling. So what we're going to be doing here is either looking for clearly the longs above, the shorts below. In terms of the short below, I don't like the margin available. We've got big points of liquidity coming into play quite quickly in this one. So if you look down at around sort of 89.25, of course 89.30, 89.33, 89.40, there's lots of sort of points of inflection here that would concern me about taking a short. The long is not the same though. The long is not the same. If we look at these highs sort of running back here, that's fine. We've got a couple of lows that I would sort of deem to be problematic. So I would draw a zone around most of those lows, incorporating as many as I could, arguably to around there. And then I would create this as my trading margin. Now you can see it's the trading margin because we've actually had a couple of highs after the bounce back and it's passed through really nicely. We like things that pass through in price action like that. Ultimately because it shows us where the path of least resistance is lying, where those commercial points of interest are, and that's exactly what we're always aiming for. What is the route, the path that price has to work the least hardest to take? Because that's exactly what happens when commercial institutions are positioning themselves in the markets and how they unload and load up on their funds and stuff. So it all works in really, all ties in really, really nicely. So that's what we're seeing here in the Aussie CAD at the moment. So what I'm going to do from this point on is arrange a breaker structure entry, which is probably going to be about there. This is hyper aggressive entry, this one, but I want to get into the market so that I can ideally get my stop loss below the 89.61 level. So I'm going to have a long in the AC. I'm going to have my target up there, of course, at around 89.83 with my stop loss. What's that going to yield? So that's a 1 to 2.86 there, which is absurd. So I think I can actually get the trade in at a 1 to 2.2 and still beat the lowest low before we get the breakout, which is, as far as I'm concerned, team, absolutely bloody brilliant. Love that trade. So what we're going to do here is we're going to put that into our order book as well. So that's going to be the Aussie versus the CAD, which is a pending order, breaker structure access, 0.25% on the trade, and that's going to be a long. Really nice. And now we've got quite the diversified portfolio here in the FX space, especially. Really nice. Aussie CAD, Aussie NZD, Euro Yen, Euro Dollar, Cable, NZD CAD, NZD JPY, and USD versus the Swiss. Lots and lots going on. So we're currently at 10 past 2. Time's definitely getting away from us. So we're going to now work on our metals and energy markets, then tying up with the US indices. So with the metals, with the metals at the moment, then looking at gold. Yeah. I mean, we've certainly got a really nice break, close, and retest point going on here. Okay, so that's really nice. We've got the double point of inflection. We've got the W reversal. We did have a bit of a rally, crushed it. And now we've come back for that retest, which is great. But the retest, more so than just that, is also the retest, of course, of the bigger, the more powerful and prominent level of money, which is in here, right? All in the space of, all in this area. So we do have commercial interest on our side. We do have commercial interest on our side. I'm thinking, could we go for a very short-term short to the previous low, just from our recent level? Could we do that? Of course, Corriton. Yeah, of course I will. Yeah. So could we do something like this then? Fine. Okay, we're blowing some margin at the top there. That's fine. We break through this point in here, which is the most problematic area that I see. We got a pretty decent margin back down to the previous lows. That's not too bad. I'm going to take a punt on that one, definitely. I think that's worth my money. So I'm going to put a short on that one as well. I'm going to look at, again, I'm not looking at anything too aggressive here. I want a 1 to 2.2 out of it. I think that's going to be enough to sort of, I mean, if the market breaks back above, it's going to be a loss anyway because it will go back straight back up to 33.40. But I think this continuation back down to the previous low, it makes well-rounded sense with where the market is positioned in the bigger picture, the broader context at the moment, trading away from commercial liquidity. We are performing a series of lower highs, lower lows at the moment. The structure's there. I think it just makes sense. So that's going to be an added as well. So we're going to go for gold, and that's going to be pending break of structure 0.25%, and that's going to be a short. Oh, lots of stuff going on today, guys, and don't forget as well, of course, we have the silver trade, which is a million miles away now from its proposed entry, way up there. So when we see something like this, when we see, you know, we were close to the breaker structure point yesterday when we outlined it, we had the sell-off as a direct result of it. The market's now traded away from that entry. That's dead money. That money can't work for us anymore. So what we're going to do with that one, we're going to delete it. We're going to get ready. So that gets removed from the trading account. No more. So silver's clear. And I'm going to move that. I'm going to classify the exposure that's now in gold as the exposure that was in silver yesterday. And we're going to keep that balance. Okay. So that's how we're going to play that one out. Now for the energy markets. So energy markets at the moment, natural gas, first of all. I mean, it's certainly been trading higher. I don't think I want to be trading this one at the moment. We've got a floor in there. We've got a ceiling in there. We've got the big liquidity above price action at the moment. There is no clean or clear path of least resistance, which means we don't want to be trading that one. It's too much effort. Big sell-off day for UK Brent and US crude today, minus 1.12%. Shaved off in Brent with a minus 1.4% shaved off in crude. We crushed the first part of the analysis from the weekly analysis report, and it hasn't stopped going. It's not stopped dropping. So at this stage, it looks like we are going to start sort of breaking out from daily liquidity. Could we see the run back down to the major point of inflection in there? I mean, that's one hell of a trading margin. That really is. That's a very nice trading margin in there. Wondering if we could possibly look at shorting with the continuation of the current channel here between these two margins. Maybe even, to be honest with you guys, we could even do something a little bit more brass and getting at the top there at 68.20. Have our stop losses way up into 68.60, 68.80 territory. By doing so, we obviously do run the risk of an increased chance in price rejection of the structural point and it bouncing back. On the flip side of that, of course, we also have a much higher stop loss, accounting for any potential volatility strikes or wick throughs that may happen as a result. Options. I don't think I'm going to trade it yet. I think that's... Oh, hang on a minute. US crude. Ah, oh, damn, that's a shame, actually. That's already on its way. That US crude setup would have been really nice. Yeah. It's not too far away from where the entry would have been, honestly. Yeah, it's not too far away from where the entry would have been. But in order to now take this, we would have to be coming down below this area. And I'm not willing to do that. Or we could, if the market comes back up here for a second attempt, I'd be happy taking the next breaker structure that comes down there. So let's say, for example, the market comes up here, triggers my alarm. Potential for the short below the structural point at 66.01 would be back on the cards. So I'll leave that as a tentative. We'll get back to that one. I can't remember if I took a picture of gold or not, so I'll take a picture of that one. And I can't remember Aussie CAD either, so I'll take a picture of that one. I will be sending all these out, of course, after the session today, but just in case. Do you know what, guys? I didn't actually take a picture of the Euro USD either. There we go. Right, let me just upload these in the chat so you guys have got them. I will be putting them out there straight after the session as well. There you go. Right, so US indice time, team. Let's have a look. US 30 Dow Jones looking a bit better today. It's certainly not perfect, but it is looking a little bit better. We need to be trading above this point in here before we get long interest, okay? But whilst it's trading inside or beneath, no good for longs, but it does have a very, very nice trading margin back up to at least 44, 43, probably higher. This does incorporate, of course, the gaps that we had midweek, and it also takes into account all the highs and the lows. It looks pretty good. The one above that one is the ultra nice one, which is up there, but I'm not expecting the market to do that today with the the time that we've got left. So looking at this Dow Jones at the moment, I would say that if we can get a break, well, this might be the break close retest. Let's say a break of structure. Let's say a break of structure in there. Right, so if the market breaks out above that level, then we'll probably be pretty good for longs above that level, heading up to here. And yes, that is not the zone above. That is in fact this zone in here. So that's ultimately what I'm looking for. So that trade idea is going to yield a 1 to 2.91 approximately. So I really like that. For the Dow Jones short today, which there are also the margins for as well, we've got lows 1, 2, and 3 in here. But the third one has something different about it. The third one has a rebound retest going on. So now what we know is there's definitely commercial interest here. If I drew a zone sort of situated there, run it across to the left, to the right hand side, sorry. Now we can use that as a break of structure point, because the market breaks through there, it's broken through commercial interest, which means there'll be a lot more short sellers coming into play. I'm going to have that zone copied, bring that down to the bottom, and that's going to be the base that we're looking for our target profit, which means now if we get a sell-off, we're going to be in the market there, out of the market here, and our stop loss is going to be situated around the 50% point between these two zones. And that yields a 1 to 2.26, which is not half bad as well. So that's the Dow Jones. I don't want to go all three US indices, so I'm going to scan it NAS 100 and S&P. Yeah. I would say the S&P looks nicer today. Yeah. Yeah, I definitely think the S&P looks nicer today. So, first point of call, draw in the floor. That's down there. Second point of call, draw in the high. High's way, way up there. And then, now that we've got the low and the high, we are going to put that in there. Don't know where the break of structure is going to be for the long. Probably the break close retest. But the BOS for the short is very, very clear. And that's that. So that's the short break of structure. And that, I mean, that's a whopping trade. That really is. I probably would prefer to see about there for the S&P short. So let's plan it up. Entry. Target down at the lows there. And then the stop loss for this one. At the 50% point between those two trading margins, the stop loss is a 1 to 3.24. Now, the problem is with a 1 to 3.24 as it has increased levels of failure rate. The higher the risk reward, the more likely it is that it's going to be a stop out. So we don't really want to be going for a 1 to 3.24. It doesn't make sense. It doesn't make the right kind of sense, the right kind of vibes for what we're aiming for here. So what we're going to do is we're actually going to increase that stop loss. We're going to bring the stop loss up closer to the high there, and that's going to be a 1 to 2.48. So this decreases the chance of the failure rate of the trade. Also, it increases, allows more room for the trade to breathe, for the market to breathe. So Yeah, it's a good one. That's what we want to be aiming for. Now, for the long in the S&P, we cannot ignore this area in here. We cannot ignore it. It's huge. Major point of inflection repeatedly for the S&P 500. The only issue with this is I don't see a solid long trading margin available for us with that one in there. We have a point of interest which could probably be construed as a TRF or a technical risk factor, and that's it about the 50% point of that margin. Above the margin, you've got room. Yeah, you've got room to work, room to breathe up there. So for example, if I bring that up to there and have that secondary zone, the room to maneuver between 62.78 and the high at 62.94 is strong, and it makes sense. But the problem is, guys, the S&P at the moment where it is, there's no way we're going to be looking at those kind of levels today. So the short is the only one that I'm going to go for with the S&P 500. Yeah, that's the only one I'm going to go for today on the S&P. Do we have a long in the NAS 100? That's what I'm thinking. If we've only got one access point to the S&P, maybe we can utilize the NAS. If that's the point there, and that's the high up there, yeah, and then the breaker structure for that one is about there. Yeah, I think we do. I think we can work with that. So then we're going to be looking at the long target and of course the stop loss, which is going to be yielding us a 1 to 2.45. So that is not bad at all. Yeah, that's not bad at all. Right, team. So I think, it's been a bloody busy day. We are at 24 minutes past 2 at the moment. It's been a very long session. We've got 25 past 2 now. We've got 5 minutes to go before the US bell rings. So I need to get off and prepared for the US markets. I need to grab a coffee, which is the number one thing I need to do. Just to recap on what we've got going on, we've got the USD Swiss, NZD CAD, cable, Euro USD, Aussie NZD, another Aussie NZD, Aussie CAD, and gold. Every single position of which can be placed via a pending order, because we are only looking for the break of structure parts to that, to the access point. We're risking 0.25% with a mixture of longs and shorts across the board. We've also analyzed and provided US 30 Dow, NAS 100 and S&P 500 opportunities for this afternoon on top. So an absolutely whopping great deal of stuff to get on with. Now I am going to have to get going sharpish here, guys. I don't want to miss my own trading this afternoon. Please have a great time out there this afternoon. Take it easy, play it safe, of course, as always. Be constructive with what you're doing. If you have any further questions or anything that you would like more information on regarding the session, regarding some of the trades that we've got planned, please feel free to reach out to me inside the trading room and we can pick that up at the earliest convenience. So take care, guys. Have a great day out there and I'll see you then. Cheers. Bye-bye.